Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Glad to be back, Jim. I appreciate the invitation, and I'm pretty fired up.
Rick, again, after a few days of major losses on the U.S. equity markets, a bounce back, but is this what they call in the navigation business a blue hole in the sky that you drive your airplane towards, but by the time you get there, it's closed up? A sucker hole.
That's a nice analogy. I like the metaphor because usually, I was expecting you to say dead cat bounce, but we're certainly nowhere near dead catting. We're just in a market that is in the upper reaches of its long-term history, and I don't trust this rally one bit. We're getting a lift from the most artificial kind of pronouncements in Germany, for one, that Germany is now they've finally been coerced into doing a little deficit spending. And that the Germans have never been keen on that since the early 20s. And I shouldn't expect much of a stimulus there, but it didn't stop the DAX and the other indexes from rallying, and it's kind of spreading. And we've got our own blather coming out of Mr. Trump about he's going to take some action that's going to make more favorable tax policies toward companies. Mainly, it would be let's just say a little rejiggering that would tend to favor what we call the rich in this country, but which we know for tax purposes is really the broad middle class. So we're getting a lot of chatter there intended to keep the markets buoyant, but I'm just not sure how long it can last against a reality that's a little heavier.
And what is that reality? Is housing picking up? Are auto sales picking up?
No, they're not. We've got autos piling up on the lots, and I can see it really in the lease deals that are out there in South Florida where I live, but also other places. The manufacturers are really pushing to get everything sold so they can keep manufacturing, but if the dealers can't move the older cars off the lots, the manufacturers are going to have to start cutting back. And there you have a good old-fashioned inventory recession building against other types of, let's say, financial implosionary forces. So autos have peaked for sure, and housing has peaked as well. We knew that when we started seeing $60, $80 million homes for sale in L.A. and in some of these pencil skyscrapers in New York. They're way overbuilt on the high end, and even though there's still some activity in the middle range, homes priced, let's say, $300,000 to $600,000, $700,000, $800,000, we're getting good refi activity off the lower rates, but not much buying. And the reason for that is home prices are too high for first-time buyers. And so we get a little bit of stimulus because the refis are allowing owners with some equity to cash out, to get some cash. But we know how that ended in 2007 and 8, so I wouldn't look to America's future in lower rates to stimulate housing. It ain't going to happen. So everything looks good. Trump can still get out there and say, the economy's going great guns, but it's really a static picture. We're dynamically on our way into an abyss.
We'll have more with Rick Ackerman right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, are all the companies who have been busy buying back their own stocks going to get burned by that?
Well, I only saw the headline today in the Journal. I haven't read the story, but it said that the corporate buybacks amounting to trillions of dollars of stock prices, it's in the $1 trillion category, that they're moving away from that. There's a lot less share buyback. And a lot of the money for that, of course, came from the tax changes that allowed these companies to bring money ostensibly back to the U.S. You know, the money's fungible. It sits digitally anywhere it wants. And it's simply the tax treatment that makes it move across borders in theory. So not as much as moving. It's all been more or less expended. And of course, you've got the companies kind of buying stocks at these elevated levels, the same prices that chimpanzees that work the trade desk for the institutions are buying them. So everybody's, I guess it's probably dawned on a lot of them that stocks are pretty pricey up here, and we're going to get. There are a couple of things still to come that are really going to hammer this market, at least on the psychological side. One is some of the big IPOs that were on the horizon. I guess the one that's getting a lot of attention is WeWork. And WeWork has been, there's no way that that's not headed into disaster, because the Wall Street Journal has done its best to put out there that the founder of WeWork has cashed out so much to support his lifestyle, and it brought into question just the real estate practices, the major cost of the company, which is refurbishing offices for rent, but they are so overdrawn going into a high-profile IPO that it's going to be a big deal psychologically for the markets. And we've got some of the other unicorn stocks that'll never, ever, ever make a dime, like Uber. They were in a flux earlier, just kind of bouncing from oversold lows, but they're going into the pits too.
Should, when somebody's investing, take a look at the lifestyle of the executives? Are they charging a lot of travel and other expenses to the company, especially if you're looking at junior miners? Because I've been told some companies, the two top executives spend more flying around than they do exploring.
I don't mind that myself, and I, to put it in perspective, I had shares in a good little company that's got a great business. They're signing up blue chip clients all the time, and yet the stock has gone from they've diluted it tenfold. It was what was it, 20-fold, 6 million shares. They've got 120 million shares now. So I would much rather that they go out and they buy corporate jets or charter jets or something like that, and live extravagant lifestyles and keep watering down their stocks. So I think we shouldn't begrudge these criminally greedy types that sometimes run companies their material excesses.
We'll have more with Rick Ackerman right after the break.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, is gold still the shiniest object on the shelf?
I like it. I'm not a $5,000 an ounce bull, but I sure as hell like it, especially as a port in the storm that's coming. I noticed today that with the stocks getting squeezed higher, the broad averages are up, gold is barely down, and I think that's pretty bullish because usually the chimps who do the trading and make the markets, drive the markets each day, they can't chew gum and breathe at the same time. So they know that if they're buying stocks, their tiny brains are already occupied with that task. They tend to hammer gold or get it out of the way. But today the hammering was only able to put gold just slightly underwater. So I see gold as holding its own nicely against a tide. So I like gold. And of course we've talked about bonds. Anybody who jumped on bonds when you and I started discussing them has a capital gain of 20% plus for the year. They're good. And I'm not buying the story that there's no more room, that bonds have bottomed. On a technical basis, yes, I was prepared for the turn, and I may have given you a target on the 10-year note at 1.47, I think it was, 477. And it's turned from within 200ths of a point of that. So I'm taking this rally seriously as a possible bump up in yields for the time being. But I think we're going to head down again, especially with the recession shadow hanging over the whole planet. So I still like bonds. I think there's forget about the yields, but the upside potential is pretty good for the price gain, which is a capital gain.
China, is it being hammered by the tariffs, or does it have more problems than just U.S. tariffs?
Well, great piece in the editorial op-ed section of Wall Street Journal. I think it was yesterday or maybe this morning, and it was talking about how the U.S. is really losing more than China in this trade war. In fact, it said that to the extent China's GDP has gone down to a rate of about 6.2%, I think was the last reading on it. It's not primarily because of tariffs. They're picking up trade, whatever they're losing in trade with the U.S., they're picking up elsewhere. But they do have a somewhat of a domestic consumption problem that looks pre-recessionary. So China could be headed down, and as far as the currency adjustments, they were doing fine by us, trying to keep the yuan strong, and I think Trump was sort of talking in the wrong direction there, because now they're no longer, let's say, our allies in helping to keep the yuan strong, and they didn't really devalue it so much as having it get devalued on world markets. It's really a question of trade flows, and if you're running huge deficits, the countries that buy from you, they need they need, if the U.S. exports a lot, then the dollar is getting out there outside of the U.S., and it tends to drive up the demand for dollars. So as I said, the yuan wasn't so much devalued as pushed by market forces.
How important is it for countries to control their currencies, or do you actually have much control over currencies considering they're traded worldwide?
Well, you can't control them. And I think even looking back 30 years, if you were in the doomsday camp, it was easy to see that the death knell would be in the dollar. I mean, you can control certain markets short term, really manipulate them, but the dollar is too huge. You've got a quadrillion-dollar derivatives market that is denominated almost entirely in dollars, and for 20 years or so, I've been predicting that eventually we would have a short squeeze on the dollar. That's kind of the deflationary end game, when everybody who owes in dollars is forced to settle up, and dollars are becoming very scarce because the paper supply of them is shrinking, is not shrinking, it's collapsing. So I think that's still coming, and it really is the end game for deflation. But a strong dollar is, in good times, all things being equal, trade being being well distributed across the world, you want a strong currency to have a strong economy. But in this case, the short squeeze, the increase in the value of the dollar won't be driven by trade flows at all. It will be driven by currency flows in markets that are hugely larger than what the world actually trades in goods and services.
If you were trying to pick a certain area that you'd feel confident in beyond bonds and gold, is there one?
There's not much really. You could take the tried and true crap that everybody buys. They're starting to go after just any stock that pays a dividend, and I think that's good. That will last for a while. It's not really a crazy theme, but ultimately, the ability of these companies to pay dividends will be impaired by a recession. And 5-10 years ago, I would have said, well, go for the hardcore consumer products goods, Rubbermaid, things like dish drainers and all these household products. But even there, all the branded names are getting crushed. Even Buffett got slammed just with his big stake in Kraft foods. You'd think, well, he's buying the food chain. How can he lose? Well, he's losing because so much of the consumption, the shoppers, are switching over to in-house brands, or even worse, they're switching to healthy foods. So they're not really going for all the packaged stuff. So it's hard. I'm hard pressed to say where real safety is. I think we could be very limited. Generally speaking, a good guideline would be buy the stuff that looks worse now. Anything with a yield that is garbage, and you can see what to avoid there, because we've had such an uptick in low-grade corporate bonds that you got to be thinking, well, there are limits here. So I would say let stinky investments be your guide. If it looks like crap today, I think it's tomorrow's winner.
General Electric, the same journalist who dug into Bernie Madoff and blew the lid off that scam, said the accounting tricks that are being played by General Electric are up there with what Enron did. And is General Electric in danger of disappearing suddenly because of that?
Yeah, it's looking sort of like a variation on Lehman Brothers. If even 3 or 4 years ago, you would have said, how much bad news can there still be on GE? And you're right. The latest news is this guy, I think his name's Markopoulos, who knew exactly what Madoff was doing, even though it took the regulators a few years to believe him. Well, he's saying that GE's financial, its balance sheet is just a lot of bull. And, he's made some pretty serious charges. Let me look at GE's chart, because you'd think there's nothing left. They keep selling off their best parts, and they would have long ago ran out of great parts, and I don't even know where they're making their money anymore, if in fact they are. And every time GE gives a prediction that they're going to turn things around, it's a little bit like Tesla. You can forget it. So, all right, looking at the long-term chart at GE, it's horrible. 2017 early on trading $30, currently $8.30, and it looks to be headed lower. Let me give you a price forecast here. If I can, I'm just sort of working with the chart. And all right, so we got a little rally off $7.80 some cents, but I think it's going to crack that, and you're going to see the stock come down to, I'm going to give you a projection here of $4.44. So I'm not sure what kind of news is going to be a companion to this destruction here, but it's coming. So the stock is going to get cut roughly in half from where we are now, and I would say that that's only a couple months out.
Rick, anything else you'd like to add to today's pile of stories?
Just scary. There's so many things going on in the world. We are living, unfortunately, in the most interesting of times, And it's odd. It's an odd thing to handicap because we're in the third year of a the election cycle, and that's typically the most bullish of the 4 years. And we've got the Trumpster determined to keep things on an. I think he's got visions of driving the market higher. There's no way this market's going to new highs, and he'll have his hands full just trying to keep things from collapsing. And we may have talked about this before. It's something I've certainly put out there in my newsletter. But if the idea, just the very idea that Elizabeth Warren could be in the White House starts occupying real space in people's worries on their worry list, you can forget about it. I mean, there will be no bottom for this market. And of course, it feeds on itself, because as the market goes down, impairing the psychological forces that are keeping the economic growth cycle alive, a falling market is going to undermine the psychology that makes it possible. It makes us think, well, things will turn out all right. America's still doing business. I'm in business. I see a lot of movement out there, but that can change very quickly. And if the market comes down enough to think, geez, the economy is in jeopardy, and the obvious tie to that is Trump's reelectability is in jeopardy too, the Dow's going to be at 8,000 before you can think about it.
Do you think there could be almost a psychology of, gee, if we vote for this particular Democrat, then we'll punish the corporate fat cats that caused the crash?
I think anybody who thinks that just doesn't have the imagination to see what's coming. The system is so loaded with debt, and looking at kind of a bigger picture, a macro picture, the baby boomers are starting to hit full brunt in retirement. They are sucking up so much Social Security and Medicare, and I'm one of them, by the way. So I recognize the problem personally that I'm creating, at least not me as an individual, of course, but baby boomers who are becoming retirees at the rate of, I can't remember how many it is per day, but it's startling when you recognize that the financial costs of their retirement and medical care is being piled onto a base of millennials who can barely get jobs. We've got 16 of them working for Google, and a couple more work for Uber and whatever, but they're not. There's no way that the millennials are going to be able to foot the bill for the baby boomers' Medicare and Social Security. It can't happen. And anybody who tells me, oh yeah, you've been blathering about how the sky's going to fall for the last 30 years. Well, I try to put this as simply as I can, and it's where we're going, and there's no sort of accounting tricks or monetization QE that's going to get us out of it. The simple fact is that the millennials are going to be crushed trying to pay off the baby boomers' Medicare and Social Security. It can't happen. So something has to give. And for one, you're going to see medical services triaged enormously, just so that they can deliver any services at all to the user base. So there's an inevitability there. I mean, we can talk about the Social Security system will be bankrupt by 2030, but forget it. It'll be bankrupt in 2021 if the stock market comes down hard enough. The solvency is just an illusion. It's really only because we're still living off the fatted calf here, and tax revenues support the actuarial fact that more money is getting paid out to Social Security than is being taken in.
Rick, thank you so much for chatting with us.
Thanks for inviting me on, Jim. I hope I don't depress your audience too much, but I guess there was a lot. I just see a lot happening right now. We're living in interesting times.
Forewarned is forearmed.
I hope so.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.